This is a guide to help you how to enter, exit, and manage trades and manage your account. So firstly, do you fear that the price will not hit your entry level? This happens to a lot of traders. Do you watch the price moving up and down? You're waiting for the price to hit your entry level. You've done all your research, you've done your analysis, you've decided where you want to get in, and then you end up jumping in before it reaches your entry price.
You need to wait for the correct entry points.
Don't chase the price because you fear you're going to miss the move. You have to be prepared to miss a trade by a small margin. It will happen, accept it, or you will continuously enter at unfavorable levels. How much of your account do you risk per trade?
My rule is always risk the exact same amount per trade.
You never know which trade will work and which will not. I'm constantly surprised at the outcome of my trades to this day,
Even after doing this for nearly 40 years.
Do you set a stop loss order when you enter the trade, or do you try to stop loss manually when you cannot take any more pain and you panic to exit?
My advice is to set a stop loss when you enter the order.
This is when you are experiencing no emotion, you can think clearly, you're in an analytical state of mind. It's the only way to guarantee you will minimize your risk.
Setting your stop loss should be an automatic process when you enter your order.
Do your analysis when you have no open positions. Only then will you have no bias. Try to identify low-risk entry levels in the direction of the prevailing trend. So, for example, you buy at a support level in a bull trend.
Then you enter your targets at the appropriate levels that you have identified in your analysis.
Wait for the markets to go to your target. Don't watch the prices going up and down along with your P&L.
Find something else to do while the trade plays out.
The only way to minimize your loss and maximize your profit is to exercise the correct risk versus reward ratio. This means that you should only risk 10 pips in order to make 15 pips or 20 pips. This is only possible if you wait for the low-risk entry points, because then you can have a sensible stop loss within the correct risk versus reward ratio. If you get in too early by buying above the support level for fear of missing the opportunity, you increase your risks and you decrease your potential profit. Therefore, you must be able to accept missing a trade by a few pips.
Don't get upset.
You must be able to then wait for the next opportunity, or you might find that the market turns around and does eventually hit your entry point.
This is part of trading.
We all miss trades that would have made a profit.
You cannot get every single profitable trade.
Do not ever chase a trade as it moves away from your entry point if you did not manage to enter in time. So often, prices will give you a second chance by retesting your entry level. You must risk exactly the same amount on every trade, and this amount should be not more than 2% of the value of your trading account. The only way to avoid being emotional in a trade is when the amount of money at risk is not significant enough to cause you pain. You must be able to move on to the next trade without carrying negative thoughts with you. By managing your risk in this way, if you have 5 or 6 losses in a row, you're only down about 10%.
This means that you can continue to trade without any significant problems.
You won't be in a state of panic and desperation. But if you trade bigger size, then you're trying too hard.
You're being greedy.
You're hoping to make unrealistic amounts of money in the short term. Trading is about making small amounts of money in the long term to build an income. It's not about making big amounts of money in the short term. Losing a large sum can lead to revenge trading, which never ends well.
Consistent trading is key.
Successful trading is actually boring. It should be unemotional and robotic. Trading too big will ensure that you blow your whole account eventually.
I absolutely guarantee this because I've done it myself many times.
You may have a huge gain at first, but eventually you'll lose everything. Now, if you've entered a trade and you feel nervous, this is almost always because your trade size is too large.
It's not the fear of having a losing trade.
It's knowing that you cannot afford the loss. If you are not relaxed when the trade is open, you should cut the size down. If you're having sleepless nights, if you're dreaming about your open trades,
It means you're risking too much.
it means you're not relaxed and you don't feel in control of your trading account. When you become consistent and you can make profitable trades, the money will build very quickly, and if you continue to risk no more than 2% on each trade, the amount of money you will risk on each trade will obviously grow in line with your account.
Practice this in order to build consistency.
You'll be amazed how the profits grow. Next, I would advise you to set targets for your trade before you enter it according to your analysis. You cannot decide when to exit without a trading plan. If you do not set a target for the trade before you enter,
How do you know when you need to exit?
your decision will be purely emotional, spontaneous, and not based on analysis. When you can do all of the above, you will have this incredible feeling of being able to trust yourself. You will be able to enter trades confidently without experiencing any negative emotions or thoughts.
You'll be able to accept a loss and move on to the next trade without hesitation.
Here are some ideas of how to exit when your targets are hit. So firstly, you can scale out of the position. For example, you sell 1/3 or 1/2 when your first target is hit.
This satisfies your need to bank some profit,
but also gives you the opportunity to benefit from further favorable moves in prices. Secondly, at the same time, you can trail your stop loss in the direction of the profit, so if the market turns around and reverses, you protect some of that profit. Thirdly, by getting out in 1, 2, or 3 different stages, you satisfy that desire to take a profit.
you leave that anxiety without getting out of the whole position too early.
While you're learning to trade, it's really important to stick to the rules. At this stage, it's not important to make money. It's important to build and ingrain good trading habits in your mind that will allow you to make consistent profits in the future. This is my experience of what it takes to become successful at trading.